Welcome to APM Grand Revision, and this is your instructor Rizwan Maniya. You all know my struggle for APM continues, and this is my statement these days, and I think that I'm trying my best to make APM easy for you people. Okay? So today I've planned a really good grand revision for you people, and through this revision you'll be able to recap almost everything of your paper, and you will get to know the important connections, and it will give you a lot of confidence for your paper. So my friends, there are certain house rules that I want you people to follow. The first rule is, if you are using headphones, that is perfect. So do use headphones, okay? Just use the headphone. Your face should be right straight in front of your screen. You should be very closely watching me, my expressions, the links I'm telling you, whatever I'm saying. Don't try to copy anything, okay? No need to copy things. Otherwise your concentration will lose, okay? And you'll be distracted. So you need to have headphones. It is good if you have concentration. There should be no one in the room where you are listening to this revision, so that you can concentrate and try to absorb the things, okay? Try to understand the important pointers that I'll be telling you in each and every area that will brush up the points that you have in your mind and will give you the confidence for the paper. The last important thing is, don't leave the session till the end. I know it's tough to take sessions like this, but this is just for you people. I promised you that I will conduct a live mock. That I did. I promised you that I will conduct a free grand revision that I'm doing for you. So if I can do these things, so why not you? And this is all for you people. I know it's really tough to speak 3 hours and just revise everything, but you know my struggle for APM continues. Okay, so let's start. Who are we? Everybody should know we are consultant, right? We are consultants. And if we are consultants, we are someone who has the complete knowledge of entire business industry. You are good when it comes to a service business. You are excellent when it comes to a manufacturing concern. So yes, you are a consultant, and you all are going in your examination with the mindset of consultant. So remember, my friends, a consultant is a one who has the entire knowledge. So whatever questions that will appear in your paper, whatever requirements that will be appeared in your paper, remember, those are your clients. The companies that are mentioned in your paper are your clients. And you know, a client is a person who is in need of a service, and client goes to a consultant. So when someone comes to you for a service and in return you say that I don't know this thing, so that person will say, no, you are not a professional consultant. So this is the mindset you have to keep in your mind. You are superior to the questions that are coming in your paper. All those questions, treat them as your clients. And if they are your clients, so you are superior to them, okay? So you all are consultant. One more thing I need to add here. Those who are new to my sessions, those who are not part of my WhatsApp groups, remember, if you want to pass APM, Rizwan Maniya will help you all. So those who are new here, you can see my WhatsApp number at the start here. Just send me a quick WhatsApp message and I will add you in my WhatsApp groups, and through those groups, you will get lot of services relating to advanced performance management. Till exam last day, Rizwan Maniya will be supporting you through my WhatsApp groups. Okay, so please, if you're not part of that, if you're new here, just send me a quick WhatsApp message for the link. Let's start consultants. As I mentioned that we all are consultants. Now, as a consultant, one thing is very important. In advanced performance management paper, your role as a consultant has become really important because now you are a hybrid accountant. Now, who is a hybrid accountant? Hybrid accountant is a person who is not just working on preparing the budgets, who is not working only preparing budgets and checking the numbers. No, it's not your work anymore. You are not part of the tactical team, but now you are part of strategic team. You will not prepare the budgets. You will not look at the financial numbers only. You are not the only person who has the access of the financial system. Now, because there is a change, and the change according to Burns and Scapin is, number one, because of change in the technology, now lower management has the responsibility to use the financial systems. According to this, it says that you can use enterprise resource planning system, ERPs, are installed in the organization. Secondly, technology followed by management structure. So, yeah, management structure is also that has changed a lot. There is a concept of delayering, which means that now multitasking is important. Number three, because of so high competition, the focus of the business should not only be on financials, but it should also be towards non-financials. So as I mentioned, you need to recall with me, okay? And yes, be with me. Just write in the comment section below so that you can recap things. So there are 3 points according to Burns and Scapin. The role of management accountant has changed because of number one, competition. Number two, management structure. Number three, competition, management structure, and technology. Okay. So now you are a hybrid accountant, and which means you are part of the strategic management. You are second to the strategic management, and you help strategic management taking decisions and ensuring that they achieve their plans. So it is very important that you all should know as a consultant that what is a performance management system is and what is a performance measurement system is. By the word performance management, the thing that should come in your mind is that the entire system of an organization through which organization controls its activities, its departments, its employees. So it's a complete system of business running through which business ensures it achieves what it wants. So there is a performance management system. Under this system, under the umbrella of performance management, comes the word performance measurement. What exactly measurement has to do? So my friends, remember, measurement is something that deals with checking the performance of the organization. When I say system, so I need to ensure that whether people are following those systems or not. If people are not following those systems, then it's useless. So yes, performance measurement system will ensure whether things are achieved, and it will check whether systems placed at the level of performance management are being fulfilled or not. So as a consultant, we need to understand that our examination will be completely around this term. And yes, you will see in your paper, there are a lot of things that will come in the exam, and every time more or less the examiner will ask the impact of such a thing on performance management, the impact of such a thing on performance measurement system, and every time you have to keep this word in mind, performance management and measurement. As I was mentioning, that performance management and measurement system is very important for an organization's success. So as a consultant, first of all, you should know what is the vision of an organization. Vision is your desired picture. How you see future will look like. This is your vision. To achieve your preferred picture, you need to have a really good understanding about your mission. Okay? So, then you look at your mission. So, what is a mission? Now, mission is the purpose of an organization, the reason for existence, why an organization is existent, for whom it is existent, and what are the primary stakeholders for that organization. So, if you want to achieve your vision, you need to ensure the purpose that you are achieving your mission. Your mission is your purpose. It's your reason for existence. Okay? Now, to ensure that whether you are achieving your mission or not, you need to in place what? You need to in place strategies. First, it's strategies. So, you need to in place your strategies. Then you have the goals and the objectives. Now, here I want to tell one thing relating to strategy. So, there are two types of strategies that the organization can adopt, and that is something that Porter's generic strategies have mentioned. So, what are the two strategies? Yeah, you can quickly write in the comment section as well. The first is differentiation. Differentiation. If the strategy is to ensure and provide high quality product, if your strategy is to be a differentiator in the market, so you will work according to that. Your entire performance management system, as I'm mentioning here, will be something that will be focusing on differentiation. On the other hand, the other strategy that you can follow is of cost leadership. Yeah, what is a cost leadership? Where you want to reduce the cost, where you want to sell a cheaper product in the market. So, strategy determination at the early stage is extremely important for an organization, and you as a consultant, you have to figure out what kind of strategy the company is following. So, as I mentioned, my friends, to achieve your mission, you need to ensure that your strategies are being fulfilled. Now, strategy is important. To ensure it is being fulfilled, you need to have goals, you need to have objectives, and then those objectives are further broken down into critical success factors known as CSF. Now, what are critical success factors? Now, what are CSFs? So, everybody should know what are CSFs. Areas in which the organization should win. So, it is really easy for you to figure out critical success factor for different type of organizations. My consultant, do you know the sources through which you can figure out the critical success factors? Yes, you should know. The first, I can give you an example as the company's functional departments. According to functional departments, you can set critical success factors. Second, company's competitive strategy. As I mentioned here, if the company is thinking about differentiation, so CSFs will be focusing on differentiation. If the company wants to be a cost leader, so the critical success factors will be based on cost leadership. Okay, so this means that critical success factors determination through competitive strategy of an organization, through the industry structure, through temporary factors, through functional departments. So these are the things through which you can figure out the critical success factors. For any organization, CSFs are extremely important. Moving forward is the part where we need to measure CSFs, and that is known as KPIs, known as Key Performance Indicators. So my friends, KPIs are one that will check whether CSFs are being achieved or not. And when I say about KPIs, so you need to remember that this includes financial KPIs like percentage sales growth, like gross profit margin, net profit margin, gross profit margin, return on capital employed, asset turnover, current ratio, quick ratio, receivable days, payable days, financial gearing, operational gearing, interest cover, interest gearing, earning per share, dividend per share. So these are financial KPIs. But along with financial KPIs, there is one very important thing known as non-financial KPIs, okay? So non-financial KPIs is at the heart of a consultant. A consultant should know what is non-financial key performance indicators. Examples include percentage sales return, number of repeat customers, percentage positive feedback, number of new innovative products developed by the organization, number of hours of training, number employee retention rate, percentage efficiency ratio. So these are non-financial KPIs. Now, when I say non-financial, so we can even break non-financial KPIs into further two parts. And the one part is known as quantitative non-financial KPIs, which you can measure like number of repeat customers, percentage sales return. And there are non-financial qualitative KPIs which you cannot measure like staff morale, okay? So it's very important to strike a balance between financial and non-financial. So you can see the performance hierarchy here very beautifully set up. That is, vision will be achieved through mission, which will further be achieved through strategies. Strategies are one that you can set through Porter's generic strategies. Then you need to translate those into goals, then objectives, and then you need to have CSFs and KPIs. Now, there are certain models that will help us to ensure that we do cover both the aspects of the performance, that is financial performance and the non-financial performance. So for that, we have certain models by the name of balanced scorecard, building block model, and performance pyramid. If I start with the first model known as balanced scorecard, just listen to me very carefully. This entire video till the end will give you best revision of advanced performance management. In one slide, you will see APM. APM in one slide will be for you in a very, very different way, okay? So just listen to me. Your exams are near and this summary will give you a lot of confidence. So please, no distractions at your end. Make sure you're listening each and everything what I'm saying here, okay? I'll try to bring this in front of you in a very beautiful way and easy way so that you can recall the things, okay? So, starting with balanced scorecard, Dr. Kaplan and Dr. Norton made this balanced scorecard. Now, what they say is that a company vision, a vision of an organization will be achieved if you are focusing on the four perspectives of an organization which are mentioned in the balanced scorecard. It says that financial perspective, which will look after shareholder wealth creation. Customer perspective will ensure customer satisfaction. Internal business perspective will focus on internal efficiency of the business. And innovation and learning will take care in relation to future organization growth in terms of product development and skill development. So my friends, you need to understand this. Balanced scorecard is a very strong model. Now, how can you use balanced scorecard? So remember, this is a very unique thing I'm telling you people, that even you can use balanced scorecard for setting up a performance management system. If you want to develop an organization's performance management system, you can use balanced scorecard. if you use balanced scorecard will give you the luxury to focus on both financial and non-financial perspective of an organization. Secondly, you can even use balanced scorecard in order to measure the performance of an organization. If you want to check the performance of an organization, whether the company is having a balanced view or not, yes, scorecard is there for you. A scorecard will help you to gauge the company's performance financially and non-financially. Now, having said that, if you want to implement balanced scorecard into your performance management system, try to understand what I'm saying. If you want to implement balanced scorecard, in your performance management system, guys, are you with me? If you want to implement balanced scorecard in a performance management system, this means that you need to keep in your mind the implementation of balanced scorecard. So what implementation of balanced scorecard is all about? Number first, it says your strategy should be defined. You need to define your strategy, okay? You need to define your strategy, and after you know your strategy, then what you have to do? You have to select the measures. You have to select measures. Now, what are measures? Measures are these. You need to select the measures, the KPIs, and yes, it will require a balance of financial and non-financial, okay? Try to listen. I'll show you a beautiful connection here, okay? So, select measures. That is, you should find out financial and non-financial KPIs. Having said that, then the third is to define the KPIs into your system. It's really important that you define the KPIs. There's no point just finding out the KPIs and doing nothing. No, my friends, my consultant, the organization should implement the measures into their organization. They should implement the KPIs into their organization. A quick example, if I'm a teacher and VIFHE and Virtual Institute of Higher Education is using balanced scorecard, so there is one indicator that they have determined for me, and that is percentage passing ratio. So now if my performance will be gauged against percentage passing ratio, VIFHE should calculate VIFHE's percentage passing ratio and should compare that with the target that we have set at the initial time, at the initial period. So this is really important that you define the measures into your system and redefine those as well. The last is you need to communicate with the people. You need to tell the people that the system of balanced scorecard is not a jail for you. It's not a trap for you. In fact, through this system, we'll gauge your performance and this will help to improve the organization's performance overall. So my friends, a balanced scorecard will become part of performance management system. These are the implementation steps you need to keep in your mind. Having said that, the next model that we have is known as building block model. Now this model is mainly used for service industries. Yeah, service industries like education. Yes, service industry like transportation, distribution companies. So if you have service industry as your client, and again, if you want to implement a performance system there, so you can use building block model to establish their performance management system. Even if they require you to assess their performance, so you can measure their performance using building block model. As building block model is designed for service industry, there are 6 dimensions of building block model. Okay, now 6 dimensions of building block model includes, number 1, just write in the comment section, my friends. You need to write as well, okay? So number 1, it's financial performance. Number 2, it's competitiveness. Number 3, it's quality. Number 4, it's resource utilization. Number 5, it's flexibility. Number 6, it's quality. So there are 6 dimensions of a building block model. Now, these are the 6 areas. Using those, we'll assess the performance of a service business. These are the 6 areas where we'll be establishing the targets for a service business. So these 6 areas are the one that are important for a service organization. Now for all these 6 areas, we will develop the KPIs, and again it will be a mixture of financial and non-financial KPIs. Okay, it will be a mixture of financial and non-financial KPIs. One very important thing I need to tell here for these 6 dimensions is that out of these 6, the first 2 are known as resultant, whereas the last 4 are known as determinants. Now you know what determinant is? Determinant means determine. So these 4 will determine the results of the first 2, which means if you are good in innovation, if you are good in resource utilization, if you are good in quality, if you are good in flexibility, so these 4 will determine that your results of competitiveness and financial performance will be excellent. Okay, so there are different indicators that you need to set up for these dimensions. Having said that, these indicators are really important for an organization to achieve. For that, you need to have targets for these indicators, and these targets are known as standards. These targets are known as standards as far as building block model is concerned. So when I say standards, when you're setting the targets or standard for these 6 dimensions, you need to keep in your mind, come on, can you tell me? Can you write in the comment section? We need to focus on the first criteria of ownership. That is, people should accept these. Number 2, we need to focus on fairness. Number 3, we need to focus on achievability. Okay, so there are 3 that we have to keep in our mind here. Okay, when we are setting the standards, when we are setting the targets for these KPIs relating to 6 dimensions, yes, this is what you have to keep in your mind. Okay, now having said that, building block model is for service industry. So service industry is mainly people oriented industry. In service industry, there are people, human involvement a lot, and humans, it's really difficult to motivate humans. Okay, so you need to motivate them that they achieve the standards, that they achieve the targets. For that, building block model says that you need to have rewards in place. You need to have rewards in place, and when you are setting up the rewards to achieve the standards, the first thing you need to keep in your mind is clarity, when they will be rewarded. Number 2, motivation. Are rewards motivating enough? Number 3, controllability. So my friends, remember 3 points of rewards, 3 points of standards, and 6 points of dimensions. 12 points of building block model are important to remember. So when you are checking any organization's performance management or a measurement system, considering building block model, so you need to keep in your mind standards and the 3 criteria of that, rewards and the 3 criteria of that, and according to that you will check the organization's performance management and measurement system. Okay, now having said that, building block model is for service industry. We have another model coming up and known as performance pyramid. Performance pyramid is different compared to the first 2. Why? Because performance pyramid is basically a model that makes a pyramid and it covers the hierarchy of the organization. Come on, can you tell me? It starts from vision, and this vision is at the top point of the pyramid. Then comes the strategic level, which means to achieve this vision, you need to be good in terms of financial and market at strategic level. To achieve this, you need to further break down this into tactical level, where you have flexibility, where you have productivity, where you have customer satisfaction. Come on guys, let's recap. Just write in the comment section to be involved into the revision. Okay, then comes the operational level, where you need to focus on quality, delivery, cycle time and waste. So according to this really good model known as performance pyramid, you first set the objectives. to achieve the vision at a strategic level, then at tactical level, and then at the last level, which is the operational level. So first you set up the objectives, and then you come back from the lower level of the operational level. You start checking whether we have achieved the KPIs at operational level. If we have achieved the KPIs at operational level, this means we will achieve the KPIs at tactical level. And if we have achieved the KPIs at tactical level, this means we will achieve the KPIs at the strategic level. And if we achieve the KPIs at strategic level, this means we will achieve our vision. We will achieve our vision. So this means setting up of key performance indicators, KPI, at operational level, at tactical level, at strategic level is important, and achievement of level 4 KPIs will ensure level 3 achievement, which will further ensure level 2 achievement, and will ensure vision achievement. So this is performance pyramid for you people. My friends, you need to remember Rizwan Maniya's $1 million categories relating to these models. If you remember, I have told this in my ACCA webinars, in my regular online classes, that you need to remember the $1 million categories while solving the question relating to model. So the first was theoretical explanation of the model. Second category was evaluate or assess the performance of the organization through financial and non-financial ratios. The third was to check the company's performance management and measurement system. This was the third category, okay? So you have to check the performance management and measurement system of an organization. This you can do without a model, 3.1 category, with a model, 3.2 category. The model could be balanced scorecard, building block model, or performance pyramid, or this could be 3.3 category, which is a performance report, known as dashboard. And this is really examined a lot in your paper. So when I say if category is 3.3, where you have to evaluate the dashboard, whether you have to evaluate the performance report. So what guidance Rizwan Maniya gave you? So Rizwan Maniya told you about a very important guidance of PALE. Come on. What P stands for, my APM consultants? P is for purpose. A is for audience. I is for information. And L is for layout. So whenever you have a dashboard in front of you, very, very, very famous for your examiner. Your examiner is testing performance report a lot. So remember, if you have a performance report in your question, the first thing that you look is whether the organization, the first thing that you will look is that what is the vision of an organization, or what is the mission of an organization. So first you will read the mission, you will break the mission, into sub-parts, and then you will see whether the performance report is reflecting what is written in the mission. Is it reflecting what is written in the mission? So this is the first thing you have to do in a performance report, to check whether the report fulfills the purpose of an organization, that is mission, okay? After that, just look at the audience. What audience you are targeting? Whether the report is for board of directors or the strategic management or the operational management. So just check whether the report match their levels or not. Then you have to consider the information. Is the report very financial? A balance of financial and non-financial? And what is the layout? Is the report layout according to the audience of the organization or not? So that is 3.3 category where you are measuring the performance management system and measurement system. Then I told you about category number 4, where you are required to suggest. So remember, when you are asked by the examiner through different examinable verbs like suggest, like recommend. So now you have to suggest, now you have to recommend. But when you were required to evaluate, so in that you are not supposed to suggest, you are not supposed to recommend. Evaluation means just look at the positive points, just the negative points, and give your conclusion and give your judgment about it. But when you're required to suggest, when you're required to recommend, that is category 4, where you give your own points, where you give suggestions about the improvement of the performance management system, where you recommend the KPIs, where you recommend the improvement of business performance. Okay? Having said that these 3 models will help an organization to assess the performance. Okay? You can use these to set up the performance management system. You can use these to measure the performance of an organization. Now, let's move towards the next area. You can't see the video? You can see the video? Okay. That's nice. Thank you. So, the next aspect to consider is, if we go into the organization's different separate divisions. So now we have something to consider as divisional performance of an organization. These models, yeah, overall system development measurements, okay. But when you have to look at the division, that which division is performing better than the other, so you have certain measures like ROI, return on investment, like RI, residual income, like economic value added, known as EVA, okay. So these are the further measures which are specifically used when you use divisional performance assessment. When you're doing divisional performance assessment, these are the measures that you use further. So return on investment is a very useful measure for assessing the performance of one division with another. And listen why. Because it's a relative measure. ROI is a relative measure. But ROI is not capable to measure the performance of the manager of an organization because it results in dysfunctional behavior. So when I say assessing the performance of the manager, you have another measure known as residual income, RI. This is a measure that is much better compared to ROI when you have to assess the performance of the manager. It reduces the chances of dysfunctional behavior. As I said, RI is better for manager's performance. One more thing I will add here, and that is RI uses cost of capital. And cost of capital is what? The minimum cost that is expected by the shareholder. So when I say shareholder, so it's very much evident that when I compare ROI with RI for shareholder wealth maximization, so I would say RI is better when it comes to shareholder wealth compared to compared to ROI, because RI uses cost of capital, which is important for the shareholders. But then comes the third one known as EVA, economic value added. Now, economic value added is a measure which is superior to both ROI and even RI for shareholder wealth maximization, because EVA is an indicator that converts accounting profits and accounting capital employed into economic profits and economic capital employed. Now the question might come in your mind, why it is converting accounting profits into economic profits and accounting capital employed into economic capital employed is because it wants to convert accounting from accrual to cash, because it wants to convert accrual into cash accounting, because it wants to consider market building items, like it wants to consider research and development expense, because it wants to consider the staff training, because it says that the argument of EVA is that staff training, market research, marketing expenditure, all these actually help the organization to improve its business image and hence create value for the shareholders. Okay. So, as I mentioned that economic value added converts accounting into economic stuff. So, there are two treatments when it comes to calculation of net operating profit after tax, which APM students should understand. In your examination, you might be given with profit before interest and tax, or you might be given with profit after tax. Okay, so using both the treatments, you can work out net operating profit after tax, which is economic profit. Yeah, there are certain adjustments that you need to do, but in general, you have to add back certain things like depreciation will be added back when whatever the profits are given. You have to add back marketing expense, you have to add back the advertising expense, you have to add back the training of staff expense. These are in general, you will be doing for both the profits. But when you use PBIT, you know that interest is not deducted from that, and when you use profit after tax, you know that interest is already deducted. So if you use profit after tax method, you have to add back the interest as well, net of tax savings. But if you use profit before interest in tax method, in that case you will not add back interest because interest hasn't been deducted. But you need to adjust the tax saving of that interest that has been included in the tax figures, so that you consider that impact of interest tax savings. So once you have converted accounting profits into economic profits, the same you do for accounting capital employed, and you convert that into economic capital employed. Okay, if nothing is mentioned in the paper, remember my friends, remember my consultants, for economic capital employed, you have to use start of the year figure. So you will use accounting capital employed start of the year figure, and you will add back all those things that have been prior to the current year, because you start using start of the year figure. So all that has been done in the prior years will all be added back. Once you have converted that into economic capital employed, then you work out weighted average cost of capital, known as WACC, and in this you will take interest post-tax, after tax. Then you work out EVA. Now, when it comes to interpretation of EVA, so remember, if the answer of EVA is more than 1, come on, just recap with me. If the answer of EVA is more than 1, so what it means? It means that the shareholder wealth has been created. But if the answer of EVA is less than 1, this means that shareholder value has been destroyed. Okay, and if it is exactly 1, it means that if it has covered the cost of capital for the shareholder only. So economic value added is really consistent with NPV. Economic value added is a substitute of cash flows. I'm not saying it is 100% cash flow, but it's a substitute of cash flow, and is less subject to manipulation because you convert from accrual to cash accounting. Okay, so EVA is superior to residual income when it comes to shareholder value maximization. Now, very important and common thing that is tested in your APM paper is return on capital employed ROCE will be compared with EVA. So you need to remember that ROCE is subject to manipulation. ROCE is a short-term based measure. ROCE for shareholder value creation is not useful. So what you have is EVA. Okay. Having said that, let's move towards another aspect of divisional performance, that is transfer pricing, where two divisions of the same company are trading with each other. It's important to determine the right transfer price. So the best method theoretically is general rule, where marginal cost plus opportunity cost is the transfer price. Theoretically, it is the best rule. There are other options of transfer price like market price, which is considered fair in practical market. Second is adjusted market price, which means that from market price you deduct the internal savings that you get by transferring internally within the organization. And after that you have cost-based approaches. So in cost-based approaches, I've mentioned that you have to take standard cost, which is very important. So it might be standard variable cost of the selling company, standard total cost of the selling company, or standard total cost plus profit of the selling company. Okay. Now, once we are done with this, it comes towards not-for-profit organization performance measurement. So now the performance management system and the management system for a not-for-profit organization will be different, because not-for-profit organizations' ultimate objective is not to earn profits, but to work for that primary goal for which they have been established. So whenever you are required to check the system of a not-for-profit organization, you have to keep in your mind that your focus will not be towards profit only, but your focus will be towards multiple objectives, multiple stakeholders who are part of the not-for-profit organization, and keeping that in mind, you will establish the system. When you are required as a consultant to measure the performance, check the performance of not-for-profit organization, so you have a very simple solution of 3 E's: economy, efficiency, effectiveness. Now, what is economy? Economy is an input measure. What economy does? Economy says that whatever resource input you are doing, that should be the cheapest input. Then comes efficiency, which says that whatever resource input you have done, you should get maximum output from that given input. Maximum output from that given input. Then you have effectiveness, which says that the outcome that you have received should be a one that achieves the objective of an organization. So effectiveness mainly means that whatever outcome you have achieved should fulfill your mission, should fulfill your objectives. If it is that, then it's a very useful outcome or an output that you have received. Okay, so when you are required to measure the performance of a not-for-profit organization, my friends, remember effectiveness, efficiency, and economy will be used. Having said that, then we are moving towards a very important aspect, and that is known as corporate failure. As a consultant, you should know why an organization might fail. So you should know these general systems for the failure of an organization, because if you are a consultant of any organization and you cannot predict their failure, then you are not a good consultant. So to predict the failure, we have 2 important models in place. The first model that we have is known as Z-score. It's Z-score. And the second model that we have is A-score. Come on, write in the chat box, write in the comment section. What is Z-score? Z-score is basically a model that focuses on financial performance. It focuses on financial ratios, and it says that if you are getting a score less than 1.81, this means you are towards a corporate failure. If your score is between 1.81 and 2.99, so this means you are in a gray area, requires investigation. And if your score is 3 or more, this means that you are sound in terms of financial performance. So my consultants, when you are required to evaluate, Z-score, keeping in mind the company's system. So remember, Z-score has a positive that it covers financial performance, but it has a negative aspect that it just gives you a snapshot. It does not guarantees you anything, it gives you a possibility. Plus, Z-score is very much subject to manipulation, because it is based on financial numbers which the managers can manipulate. So on the other hand, to overcome the flaws of Z-score, we have another option known as A-score. Now, what is A-score? So A-score is more qualitative type of a model. It focuses on non-financial aspects of the performance. It says that there are defects followed by mistakes, followed by symptoms of failure. So when I say defects, so it categorizes defects into 2 further parts. It says that management defects, accounting deficiencies. Okay. Then it says that because if organization has lots of defects, for example, they don't have proper cash flow planning. They don't have proper cash flow forecast. They don't have proper budgeting system. Plus, they don't have a good finance team. They have a passive board of directors. So more the defects of an organization, the organization will tend to do a lot of mistakes. And mistakes, for example, they will involve themselves into over trading. Mistakes as in they will reliance on one project, okay? So they might enter into high gearing, high financial gearing, high operational gearing, okay? So more the symptoms, more the mistakes, there will be symptoms of failure. Like there will be creative accounting, like manipulation will be done by the managers to hide the bad numbers. Plus there will be non-accounting signs, like people will be leaving the organization, key personnel is leaving the organization, company is not being able to pay the salaries to the people. So this is one more very important signal. Plus there will be certain terminal signs which will be so much obvious to a layman that they can easily predict that company is moving towards a corporate failure, like theft, like police coming to the organization. So these kind of scandals are your terminal signs. So as a consultant, my friends, you should be able to ensure that organization is safe and sound. You have certain models that you can use as your support. Now from examination point of view, what I can say here, that your APM examiner sometimes change the name of the model. Sometimes it introduces a model known as K-score, but that K-score is completely based on the fundamentals of Z-score. So don't get confused. It's something which you haven't covered. Your syllabus includes these two models, but examiner can make any model in the paper that has the basis of the same two models. The name is different, so you can easily figure out that it relates to either Z-score or A-score, and you can use their useful points as well, okay? So having said that, my friends, now the next important thing that a management accountant or a consultant in fact does is it prepares budget, but not exactly prepare budgets. I would say that it actually checks whether the budgeting system is good or not. It actually checks whether the budgets that the organization is making is according to what is being planned, is according to the vision and mission of an organization or not. So you need to have a good understanding of different types of budgets. The first budget is fixed budget, which is prepared at the initial phase. The purpose of fixed budget is to set the direction for the organization. Fixed budget is prepared at a single activity level. Once you have prepared the fixed budget, you will not change it, because the purpose of fixed budget is to set the direction. Followed by fixed, you have flexible. Now what is flexible? Flexible is prepared at number of different activity levels, especially if you are making a flexible budget based on actual units. So you are flexing the budget, and the purpose of preparing flexible budget at actual units is to ensure like with like controlling, Then you have incremental budget, which starts from the previous period budget or actual result, in which you just justify two things, inflation and known change. So incremental budget is suitable. You need to understand as a consultant the suitability. So incremental budget is suitable in case of stable conditions, where your operations are effective, efficient and economical, okay? So it results in time saving. But it has certain issues which consultants should know, and that is previous period problems, previous inefficiencies, previous uneconomic activities will be easily transferred into the next year budget. Then comes zero-based budget, which starts from a base of zero, in which everything needs to be justified right from the scratch. This is a budget which says that you can't assume previous things. It says that you need to justify everything right from the scratch. So it is a questioning attitude. It asks a lot of questions while making the budget. So what First thing we do is we prepare a decision package. Now, what is a decision package? Come on, just write in the comment box. Decision package, what it does? Decision package tells you the purpose of the activity, consequences of not conducting the activity, okay? So decision package is prepared for every activity, and then step 2, we evaluate and rank different packages, and then we allocate the funds, and like this we make a budget. So the positives of zero-based budget is it removes inefficiencies, it removes previous year problems which were part of incremental budget. But the negative is that it is time consuming and ranking of the packages may get subjective. Then you have a very good answer for uncertainty is rolling budget. Rolling budget is prepared in uncertain situations, in dynamic situations where things are so much changing, so you go for rolling budgets. Now what you do in a rolling budget? You prepare a 12-month plan, but you break that into quarters, into months, depending on the uncertainty. And you do detailed planning for immediate quarter or a month and less detailed for remaining quarters or month. So rolling budget is advantageous because it gives you the advantage of updating your budget according to market conditions, and as well as it helps you to make realistic budgets. At the same time, disadvantages says that it is time consuming activity and too much of time is invested in making rolling budget, which means less time is available for controlling. Then we have activity-based budgets. So activity-based budgets, before I move towards that, I need to discuss the concept of ABC first, activity-based costing. Guys, be with me. What is activity-based costing? Activity-based costing is a technique that absorbs the overheads into products. And how it does? It breaks the overhead into cost pools, and for different cost pool, it identifies cost drivers, and according to cost driver, it absorbs the overheads into product cost. So a quick one, if someone wants to know what ABC is, ABC is an absorption technique, and how it absorbs, it uses activities known as cost pools, and using those cost pools, it absorbs the overhead into products. Then comes a concept known as ABM, which is known as activity-based management. So now try to understand. As I mentioned here, ABC is absorbing the overheads using the activity, whereas ABM manages the activity. ABM manages the activity. It is not an absorption technique, it manages the activity. So how ABM will manage an activity? So it asks 3 questions for every activity. That is number 1, driver analysis. Remember guys, driver analysis. Try to recall with me. Driver analysis, which means why the activity is important. Then activity analysis, what activity is being performed. And then performance evaluation, how well the activity is being performed. So by activity-based management, by managing the activity, we are able to take strategic decisions, we are able to take operational decisions. A strategic decision that we take is we decide which products to continue, which customers to continue, what are our profitable customers, we perform customer profitability analysis. What operational decisions do we take is that we remove non-value adding activities from our daily operations, okay? So this is activity-based management. Now, having understood that ABC absorbs the overheads using the activity and ABM manages the activity, now comes ABB. So what ABB does? ABB basically prepare budgets for these activities. Wow! ABC basically prepare budgets for these activities. So listen, very good summary. There is a word activity. Now, when I say managing the activity, it's ABM. When I say using activity to absorb the overheads, it's ABC. When I say prepare budgets for the activities, it is ABB, activity-based budgets. Wow! So simple, you have seen the difference between ABC, ABM and ABB, okay? Having said that, the consultant should be aware how to make budgets and should be able to evaluate those. The next area is the current developments. Now, what current developments we have to keep in our mind? As a consultant, my friends, you should know what new things are coming in the market, how these new things are affecting your performance management and measurement system. So, having said that, activity-based budget is a method through which you prepare budget for the activities, whereas through ABC you absorb the overheads using the activities, and using ABM you manage the activities through which you can control the cost. Consultant, you should be aware of the current developments. The first is economic environmental management accounting. Wow. EMA. What is EMA? Environmental management accounting is a concept which the consultant should be aware that if your client is creating any environmental consequences, if your client is creating harm for the environment, you as a consultant needs to stop your client. You as a consultant need to figure out and stop your client from creating environmental harm. So you need to tell your client that there is a hidden cost of environment and that is in your overheads. Okay, so this is your conventional cost. This is your conventional cost which is hidden in the overheads, like raw material consumables, like energy consumption, like electricity bills. The more electricity you use, the more scarcity there will be and it can create harm for the society. So this is your conventional cost. Furthermore, you need to tell your client about the reputational cost. Now, what is a reputational cost? Cost that you suffer because of bad reputation. If you are not considered as an environmental friendly company, this means your reputation will go bad in the market, and this can create bad reputation which results in loss of sale. Then you have another cost known as contingent environmental cost, a cost that will be incurred in future, like it's a 10-year project, so which means that there will be decommissioning costs that will be incurred at the end of the product life cycle. So it's a contingent environmental cost which also you need to consider, and you need to ensure that you are considering that cost of environment, because this will actually have a big impact on your profitability. Okay, on your profitability. Okay, so environmental cost is important for an organization to find out and just reduce its impact. So there are 4 methods of accounting for environmental cost. The first is, do you remember the first method, guys? Write in the comment section. It's inflow and outflow analysis. Inflow and outflow analysis, which says that what comes in must go out. If you have done an input of 100%, so you just reconcile that, how much output you received and how much is your scrap and how much is your wastage. That wastage is your environmental cost. The second technique is flow cost accounting. Now this technique uses the entire organization structure. It tells you the entire material flow from supplier till final product is delivered to the customer, and from supplier till you have disposed of the material, what is the flow. So through this you are able to understand the material that gets wasted and how you need to control it. Then you have environmental activity based costing. As I just mentioned earlier, that EMA is a technique that focuses on environmental reduction, so it can take help of ABC. So this is a massive connection. It can take help of ABC because ABC uses activities to absorb the overheads into products. So ABC can even find out an environmental cost pool. Because ABC breaks the overheads into cost pool, so environmental cost pool is what you can figure out, which can have environmental cost drivers, and like this you can absorb the environmental cost into the product, as well as you can reduce that cost by controlling the cost driver of that environmental cost pool. Okay, the second is league table. Now What is a league table? League table is a modern way to measure the performance of different organizations. We have seen a lot of league tables in sports like cricket teams league table, like football teams league table. You have seen the table where you can see number of matches played, number of matches won, number of matches lost, net run rate and things like that. So similar to this, we can have a league table for different manufacturing organizations in the same sector, for different type of service businesses, for different schools we can have a league table which will show the performance of different schools. That is number of pupils that you taught, number of students who passed, number of students who failed, number of students who got the position. So through this league table, you can very easily understand the performance, who is the best one, who is the worst one. It can give you as an organization an advantage to just lift your performance, and it gives you the motivation to improve yourself and be amongst the best in practice. But on the other hand, there is a major problem of league table, and what is that? What is that? The problem of what gets measured gets done. Wow! What gets measured gets done. The biggest issue of league table is what gets measured gets done, which means that if you know there are 5 criteria on the basis of which your performance will be checked, so you will focus on these 5 areas only. What gets measured gets done means if you are being assessed on the basis of 5 things, so you will improve those 5 things and you will ignore the other aspects. So the biggest problem of league table is what gets measured gets done. You will focus on those things and you will ignore the other aspects. But yes, league table is one method to judge the performance of different organizations. Then moving towards the next is value-based management, known as VBM. VBM is what? VBM is a concept that says that shareholder value creation should be the ultimate priority. According to VBM, shareholder value creation is the most important aspect. According to VBM, it says that shareholder value creation should be done, and directors who are working for the organization should have value mindset. Now, what is a value mindset? Every time you think about how to create the value for the shareholder is known as value mindset. So you need to have a value mindset to ensure the shareholder value creation is done. For that, directors need to identify value drivers. What are value drivers? Those small drivers that adds to the value of an organization. So they need to have value drivers in the organization. Value-based management focuses on shareholder value creation, and the measures of VBM are EVA. So when I say value-based management, so the measure of that is economic value added, EVA. VBM, EVA. You can see the connection that I'm showing you here through this summary, okay? And this is the luxury I have because everything is on one slide. So value-based management measure is EVA, economic value added, because EVA focuses on shareholder value creation. Another important measure of VBM is MVA. What is MVA? MVA is market value added. MVA is market value added. And what is MVA? MVA means, come on, tell me. MVA is the accumulation of all EVAs. MVA is the accumulation of all EVAs, okay? If you have 5 years EVA, you add all. So this is market value added. So value-based management focuses on shareholder value creation. When you need to implement VBM in an organization, so you need to look up the strategy. Your strategy should be according to that. You need to have performance measures based on short-term and long-term performance variables or value drivers based on short-term and long-term. You need to ensure you need to have plans for that. You need to have budgets for that. And your performance measurement system, yeah, this one, your performance measurement system should be a one that focuses on VBM. If you want to achieve value-based management, if you want to create value for the shareholder, so your performance system should be designed accordingly. Your reward system should be designed accordingly so that value is created all the time. Okay? So I hope this is clear to all of you. Quality cost. As a consultant, it's really important that we consider the quality cost. Now, quality is very important for any organization. So remember, if the company's mission has stated that company needs to focus on quality, so quality will be very important for an organization. So there are 4 types of quality cost, which are divided into 2 groups. The first is known as conformance and second is known as non-conformance. Conformance means prevention cost. Cost that you incur on activity to prevent the error arising at the first place is prevention cost. What is appraisal cost? Cost that you incur on activity that will detect the error, like a supervisor will detect the error, like testing that you have performed will identify the error. Okay? Then comes non-conformance group, which includes 2. One is internal failure cost, cost resulting from those products that are defective. Your appraisal system found out defective products. Now those defective products will be again rectified. So everything is internal failure cost. Then comes external failure cost, resulting because there were certain products that were given to the customers that our appraisal system was not able to figure out, and customer found those defected ones and came back to us. So the entire loss of reputation, goodwill and the rectification is external failure cost. Okay. So it is really important for us that we ensure that quality is according to the standard. So these are the 4 types of quality cost. Moving towards the next important thing is the perspective of quality. So there are 5 things to consider in quality. First is just in time. Just in time is a philosophy which says that product should not be kept in inventory. It should be produced when it is needed by the customer. So when you receive an order, then you start the purchasing and the production of that. The other aspect is TQM. Now what is total quality management? TQM says that product should be right first time. It's a philosophy of zero defect. It's a philosophy of zero defect. Okay. Then comes the third one, known as target costing. Target costing is a technique which says that when the product is in its development phase, you need to reduce the cost in its development phase. And because you are in the best place as product hasn't been developed, so you have the best chance to reduce the cost gap. After that, you have Kaizen costing. Now what Kaizen costing says that? Kaizen costing is a technique that reduces the cost in its production stage. As I mentioned, target costing is reducing the cost in the development phase, whereas Kaizen costing is reducing the cost in the production phase. When you are making the product, during the production phase, you have to reduce the cost. So how does it does? It says that, Kaizen says that continuous reduction should be done, continuous improvement should be done every time. Number 2, Kaizen says that your standard should be scrutinized on a regular basis. You have to improve your standard. If your standard will improve, actual will automatically improve. So you scrutinize your standard, you reduce your standard for cost. If you reduce your standard, if you reduce your target, your actual will automatically go down. Okay. Third, it says that waste should be eliminated from everywhere. Elimination of all kind of waste. So Kaizen costing is a technique that focuses on cost reduction when the product is in its production stage. Kaizen has a very serious fight with standard costing. Why? Let's see the difference. Standard costing is a technique which focuses on cost reduction, which focuses on cost controlling, whereas Kaizen costing is a technique that focuses on cost reduction. Now, what is cost controlling? Which means that you have to be within the standard is cost controlling. But Kaizen costing says that cost reduction, which means that your standard should be scrutinized and it should go down. Okay. Second difference between Kaizen and standard costing is that Kaizen costing believes in monthly improvements, whereas standard costing was a yearly technique. Okay. The third difference is that Kaizen costing empowers staff. It says staff is a source of improvement, whereas standard costing used to blame the staff, which means when you have a variance of material price, material usage, labor rate, labor efficiency, idle time, sales price or sales volume contribution variance, we used to blame our purchase manager, we used to blame our production manager, we used to blame our sales manager. But Kaizen says no, staff is seen as a source of improvement. The suggestions of the staff will help an organization to improve the performance. So Kaizen is totally different to standard costing. Then you have a philosophy of Six Sigma. Now what is Six Sigma? Six Sigma is a quality methodology, quality practice, which says that defects will be there. It says that a product can never be defect free, which means I would say Six Sigma has a clash with TQM. Six Sigma has a clash with TQM. Six Sigma says that quality of a product can never be 100% good. There will be defects. So it says that there will be deviations. But the central meaning is, the bottom line is that your major production should be within the tolerance area, which means 99.99 production should be within the tolerance levels given by Six Sigma. Now Six Sigma is a quality practice that is used for both areas, that is for new processes and for existing processes. If you are using for existing process, so it says that you have to define the problem first. First define the problem, understand the problem, understand customer requirements, what customer actually wants. And after you have defined the problem, then it says to measure the problem. You have to measure how crucial, how important the problem has become, the extent of the problem. And then it says that you have to analyze the root cause. Just find out the root cause. Guys, come on, be with me. Just write in the comment section. Just find out the root cause of the problem. Try to think before what I say, okay? Find out the root cause of the problem. What is the major reason why this arises? And then after finding out the root cause, just set an improvement plan. Just implement an improvement plan and then continuously monitor that improvement plan to ensure that you remain within the policies and the procedures that you have set. Then comes the approach of Six Sigma for a new process. In this again, you define the problem and then you measure the problem and you analyze the root cause. But now you think that you cannot improve your existing process. That is why you define a new process. You design a new process. You design a new process and then you verify it. Okay? And then you verify it. So the first is define, measure, analyze, design and verify. Having said that, quality Six Sigma is a philosophy which says that products can not be 100% defect free, which is against the philosophy of total quality management. As you have understood the quality perspective, then comes another area of lean management, which says organization should become leaner and leaner and leaner, which means organization should improve its processes. It should streamline its processes. For that, it has a model known as 5S. Now, what 5S model is? So, through this 5S model, we can make an organization more and more and more leaner. Okay. So, first of all, what we are required to do, we have to keep in mind the 5S model, which says structurize, which says sanitize, okay, which says systemize. Okay. So, according to 5S model, you can make your process more simple, to the point, and yes, it will remove your duplications, it will remove non-value adding features and items from your organization system. from your system of warehousing, for example. Okay, so this is your 5S model. Getting the point? Okay, now having said that, the focus should be on quality, and lean management will definitely help you to achieve that. So 5S model is one very important model that you can use here. I can quickly give you a recap of the 5S model. So first is structurize, which means to sort out the things, okay? Then you have systemize, which means make sure that things are easy to use, okay? Easy to use. So it should be a systemize, okay? Then after this you have sanitize, which says that constant cleaning of the workplace would be done. For example, if it is a warehouse, so constantly you have to clean up the warehouse, you have to sanitize the area so that no hurdles are coming again and again. Then you have standardize, which means there should be policies and procedure in place, and you have to follow the procedures. Everybody should know where inventory has to be kept and at which place, okay? And then the last is sustain, which says that continuously you have to look at this and continue to ensure that you're following all the procedures accordingly, okay? After this, it's very important to figure out the next area that a consultant should focus on. Okay, now moving towards the next area is information system. Now this is tricky, everybody. Be with me here. This is the new thing coming up and very much connected to each other. This is the last major part of your syllabus, okay? Information system, IT developments have increased a lot. And as a consultant, you need to understand their impact on performance management and measurement systems, okay? The first we have is RFID, Radio Frequency Identification Device. Now, RFIDs are basically used in your SIMs, okay? These are chips which are able to get the signals. So we are using these RFIDs in barcode readers, in our SIM cards, and yes, all these will have a very major impact on company's performance management and measurement system. Using RFIDs for your inventory management will help to find out the inventory, will help to find out the obsolete inventory, will help you to make sure that you are managing your inventory in the right place. It will help to ensure you find out thefts about obsolete products. So yeah, RFID will have a major impact on company's performance management and measurement system. The second new IT development is Internet Data Warehouse. Now, what is a warehouse? As you know, the term warehouse is used for inventory. So we have a data warehouse as well. A warehouse where we keep all the data of entire organization. If we are using 35 different softwares, so this data warehouse will include the data of all that. If you have 10 to 12 different areas of an organization, data warehouse will have the entire information of all the departments of the organization. So data warehouse is a very, very useful thing for an organization in managing the data of an organization. Through this data warehouse, because it includes the entire organization, entire year's data, you can use data mining softwares. So what does data mining does? Data mining softwares just figure out the hidden patterns. They figure out the hidden patterns, they figure out unusual trends in the data, and through those hidden patterns and unusual trend, you are able to understand the customer purchasing behavior. It gives you the idea why customer purchase, what customer purchase, and through this you can do major changes in your organization setup. It will give you the idea about the hidden patterns and customer behaviors, which can help to improve the business performance and hence help performance management and measurement. So data mining software identify the hidden patterns. Then we have a concept of Internet of Things. Internet of Things is a very important concept, which means things through the sensors are able to do things automatically. For example, you have a very new product that is very famous these days, like Alexa, okay? So Alexa is a product through which you can control the entire home. You have used Alexa in your home to control your air conditions. Whenever you enter the home, you say, Alexa, open the air conditions. Air conditioner will open automatically. You leave the home, you say, Alexa, going outside. So what Alexa will do? It will shut off the lights automatically, and Alexa will increase the security measures in the house. So yes, this is Internet of Things, which means different objects through the internet signals, through different signals, are using the behaviors of humans and are working accordingly. And this is done through artificial intelligence, which is known as AI. So artificial intelligence is something that is helping different objects to run in an automated way. It is using the human thinking, it is using the human mindset, and according to that, after understanding human behaviors, they are working as human is working. So this is Internet of Things, which has a very major impact on the organization performance management and measurement system. After we are done with this, we have another known as cloud computing. What is cloud computing? An awesome concept. Cloud computing, an awesome concept. We have Google Drives. We have Gmail accounts. So where are your emails kept? You have ever asked yourself, where are your email? The entire data of your email is where? It is in cloud somewhere. This is cloud computing, which has helped an organization to fast up its process. It has helped organization, different employees to interact with each other. Now you don't have to store the data in your physical drives, in your physical hard drives, because everything is now kept in cloud. This is cloud computing. This has a major impact on performance management and measurement system. Then comes the concept of process automation. Now, what is process automation? A process that is run automatically, which means you go for a car washing. The only thing you did was you selected basic car wash or a very detailed car wash you need. That's the only thing you did, and then car went inside a system and automatically the entire cleaning of the car has been done. This is process automation. So if an organization is moving towards such kind of process automation, which means that its system now needs to be changed, its measurement system now needs to be changed. Many car industries have shifted to process automation. Many big brands like BMW have shifted to process automation, where the car is prepared, where the car is manufactured 70 to 80, 90% through the automation. Machines are preparing a car. This is process automation, okay? Then having said that, the next thing we have is customer relationship management system, known as CRMs. CRM, what CRM does? CRM helps in two things. It helps in acquiring the new customers. Number two, it helps in retaining the customers. So acquisition of the customer is done through CRM and retention of the customer is done through CRM. Customer relationship management softwares are one that collect the customer data, that collects your interaction with the customer. They judge the customer behavior. They look at the customer buying patterns. If your customer has visited your website, they will understand their buying patterns, what they are searching, what they are finding, what they are watching, and through this they send relevant emails, they send relevant discount deals to the customers, so that customer just is prompted to buy that thing, and this will help your business performance. So your systems need to focus according to customer acquisition and retention then, okay? Okay guys, so you are getting my point, what CRM does. Now after CRM you have unified corporate databases. Unified corporate databases, the best example is ERP, Enterprise Resource Planning. Now, today's environment is a one where everything is integrated in the organization. We have SAP, we have ERPs here, where our marketing, our production, our finance, our HR, everything is connected through an same system, through a same software known as enterprise resource planning, and through this organization is able to fasten up its process. And that is why this is one of the reason, listen, this is one of the reason the role of management accountant has changed. See the connection. Role of management accountant has changed because of technology, because of integration. The role of management accountant has changed. Now the accountant is not responsible for making the budgets or checking the variances, because all the data input work is done by the functional managers themselves, the operational managers themselves. And this has a major impact on the role of management accountant. Okay? So having said that, ERPs are useful. Then we have big data. So because things are very much integrated, because you have ERPs in place, because you have data warehouses which is storing the entire data of the organization, because of all these things, you can take benefit of big data. You have big data in your organization. Because of data warehouses, you have big data in your organization. What is a big data? Big data is a one in which there is huge volume of data. Obviously, because you have data warehouses, your volume of data will be massive one. So it's huge volume of data. Then you have lots of variety of data. Obviously, because you have so much of data in your data warehouse, so you have that big data with you where you have standardized data, you have structured data, you have non-structured data. So you have lots of variety of data available. So this is big data. The third is how quickly you are able to use the data. So yeah, it is very important that you have the data, but you should have softwares. You should have a system in place that quickly makes data available to you for decision making. If you know the customer pattern, but you are not able to strike the right deal to the customer at the right time, then it is of no use. So volume, yes, is part of big data. Variety is part of big data. And the third is how quickly you are able to use the data. That is third characteristics of big data. Okay? So I hope this is clear to all of you, and these all IT developments have a major impact on the organization performance management and measurement. Moving towards a very crucial thing now, and that is integrated reporting. Now this is a big concept. Please be with me. Please be with me. See how I will link the things. You will like this thing very much. So integrated reporting, a concept in APM which says that the reporting should not be just financial. It should not be just financial. Now you have to report to the stakeholders through the principles of integrated reporting. So the first point of integrated reporting is organization overview. You have to tell your stakeholders, you have to give an overview of the organization to your stakeholders, and this overview you can give to your stakeholders by performing Pastel analysis. Wow. Pastel analysis. So what Pastel will do? Pastel is a model that helps you to find out external pressures, external factors, macro environment you can figure out through Pastel. So you can just tell your stakeholders, you can communicate your stakeholders the political pressures the business is facing. How political pressures are affecting performance management of an organization. How political factors are not allowing you to achieve the mission of an organization. Are you getting the links, guys? So, political factors, economical factors. What is the cost of capital in your economy? What is the interest rate? What is the inflation rate? Whether it is supporting your mission, whether it is not supporting your mission. The social factors, the demographics of the people, the attitudes of the people, the fashion of the people, the mindset of the people, the culture in the country. Then technological factors. How technology is helping to improve the business performance. How these developments in technology is helping to improve performance management and measurement of the organization. The environmental factors, how how you are considering the environmental pressures. This means environmental management accounting. We have a very clear link with EMA here. So it says that how environmental factors are affecting the organization. And then the legal matters, any penalties, fines that are placed on the organization in the past, how these will affect the organization business performance. So you tell the stakeholders that what economic pressures you are facing. Then you can even give the overview of the external environment by Porter's 5 forces. You can tell stakeholders that through Porter's 5 forces, what pressures we are facing, like threat of new entrants. Our business is facing the threat of new entrants. And listen, if new people are coming into the organization, our business performance will go down, our profits will go down, our revenues will go down. And if our revenues are going down, our numbers are going down, this is affecting our organization stakeholders' wealth maximization criteria. Okay, so you have to keep this in your mind, friends. Are you all following me? So, threat of new entrants, then bargaining power of customers, bargaining power of suppliers, how this is affecting your organization, threat of substitute products, and the intensity of competition within the industry. So your stakeholders should know that how Porter's 5 forces or these 5 forces are affecting the organization's performance. Then you have stakeholder metrics. This will tell you that what are your major stakeholders. You have to report them. You have to tell the stakeholders that you are our primary stakeholder. You are not our primary stakeholder. Through this metrics, you can identify key players. You can identify people who have to be kept informed. You have to identify people who have to be kept satisfied. You have to identify through this metrics the one where minimal effort is required. This metrics will just judge stakeholders on the basis of their interest and power. So integrated reporting point 1 says, just report to your stakeholders about your organization and the external forces, and these models will help you to do so. The second aspect is risk and opportunity. What risk you are facing, what opportunities you have. So which model will help you here? Come on, can you write in the comment section? So the model that can help you guys is SWOT analysis. It will help you to figure out your strengths. What are your weaknesses? What opportunities you have? And what are your threats? So SWOT analysis will help you to figure out your strength, weaknesses, opportunities, and threat, and then just report to your stakeholders. These are the strengths we have. These are the weaknesses we have. We have to convert our weaknesses into strength. We have to match our opportunities with our strength. So these are our threats. Okay. The other way to find out the risk in the environment is through risk and uncertainty, is to find out risky situation, a one in which probabilities are available, an uncertain situation in which probabilities are not available. So there are 4 types of decision makers: risk seeker who wants to take risk, risk averse who are not ready to take so much of risk, risk neutral goes for the most likely outcome, sore loser who take decision on the basis of future regrets. So there are different techniques. Number 1 is expected value, which is used by risk neutral in a situation called as risky situation. Expected value is a long-term average. Expected value is a long-term average. Then you have the second technique, Maximex Rule. Maximex Rule is used by risk seeker, and this is used in uncertain situation where there is no probability available. So Maximex means what? From the best outcome, select the best one. Are you getting my point, guys? Revise with me. Then we have Maximin Rule. What it says that from minimums, select the maximum one. So can you tell me which decision maker uses this? So it's risk averse who will use Maximin technique. Then we have the third one, that is Minimax regret rule, which says that from the list of maximum regrets, select the minimum regret. So the decision maker who will select this is known as sore loser. Sore loser. Yes, write in the comment section, everybody. So you have to tell your stakeholders that what risk your business has and what opportunities do you have. Then you have to describe your business. Then you have to look at the strategy and the resource utilization. For that, what you can do, you can use your Bcg Metrics here. Bcg Metrics can help you to identify the products or the departments, and strategy then will be made according to that, which means through BCG there are two criteria to look. What is the criteria? Number one, that is market growth potential, and second is market share, relative market share. Remember, it's relative market share in APM, okay? I've made this clear in my webinars and in my regular APM classes as well. So relative market share and market growth potential. On the basis of these two criteria, what you do, you perform the BCG metrics, through which you identify your division or products that fall under star category, or that fall under cash cow category, or that fall under the category of dogs, or that fall under the category of problem childs or question marks. So through this BCG matrix, my friend, you figure out stars. So the strategy should be build or hold them. Then cash cow, the strategy should be hold, to hold them, okay, and harvest. For question mark, the strategy should be what? To build them. For dogs, the strategy would be to divest them or hold them. So yes, through this you can build up your strategy, and BCG will help you to do this. Then after this, my friends, you can use value chain, Porter's value chain, which is really useful in business integration. If you want to integrate your business, so value chain plays a very important role. Porter's value chain is divided into 5 primary activities. Come on, tell me. Inbound logistics, operations, outbound logistics, marketing and sales, and customer support. So through this 5 primary activity, you are able to understand the links within the value chain of an organization, and you can set up different KPIs for these 5 primary objectives, and this will help you in performance measurement. This will help you in measuring the performance of inbound logistics through inbound KPIs, operation through operation KPIs, outbound logistics through outbound logistic KPIs, and these key performance indicators will then help you to see whether company is performing in terms of these different activities of value chain. And if every activity is performing well, this means the value chain is going good. So for this value chain, there are 4 support activities as well. Starting from the first one is general management, then HRM, human resource management, then technology and procurement. So these 4 secondary activity actually supports these primary activities, which means if I say about procurement, which includes procurement for all types of primary activity. When I say technology development, it means technology development for all types of primary activity. When I say HRM, which means human resource management, recruitment, selection, retention, bonuses, reward management of all types of primary activity, and then the general infrastructure of an organization. So my friends, through this Porter's value chain, you can figure out the integration, business integration within different parts of the value chain. Then you have 7S Mckenzie model. This is also one that facilitates your business integration. 7S Mckenzie model, which is a one that is divided into soft factors and hard factors. Yes, you can name them in the comment section. So what are Mckenzie 7S hard factors? The hard factors, so hard factors includes what? It includes structure, system, and style. What structure the organization has, what style of management the organization is following actually, okay? And the first one, let me just repeat hard factors. I just said style here. The first is the system, structure, what structure the organization is following, what system the organization actually has. The system that the organization is actually following and the strategy that the organization is following. These are hard factors. Then comes soft factors. So what are soft factors? Soft factor includes skills of the employee. Soft factor includes shared values of the organization. Soft factor include style of the management, and soft factor include staffing of the organization. Okay, so now this 7S Mckenzie model is extremely important. Remember, shared value comes in between. Shared value comes in between. You know why? Because shared value is what? The culture of an organization. So everything is connected to this shared value. This means whatever culture you have, your hard and soft factors should move around these and should be according to your shared values. Okay? So this is Mckenzie's 7S model that will help you to ensure better business integration of an organization. After covering this, then we have business models. What business model do we follow? So who will help us to decide the business model? And that is BPR. Through BPR, we can decide the business model, which means business process re-engineering. What is BPR? It says that fundamental rethinking, radical redesigning. Fundamental rethinking, radical redesigning, which means that you have to just look at your fundamental business core activities and you have to redesign that. And such BPR brings a dramatic change in your business process. It changes the business process dramatically, which gives you cost savings, which improves customer satisfaction, which improves duplications, which eliminates non-value adding activity. So integrated reporting, point number 4, which says that business model, we have to tell business model, and BPR is the one that help us to figure out that our business model should be a one that results in cost saving, increases customer satisfaction, and this BPR will help us to bring a big bang change. Okay guys, so we are done with this point as well. Then comes the next point is performance. Now what performance means? When you have to report to your stakeholders, remember you have to report on the performance of financials as well as non-financials. Financials as well as non-financials. You can't just report on financials. You have to cover non-financial as well, and you have to tell them the future outlook of an organization, that what you think the business will go on and do in the future. So this is integrated reporting, where you saw lots of connections coming up and different models that I've used here. Guys, what do you think? Is this good or not? Now, as a consultant, what is important? The next thing is important to ensure that you as a consultant do understand the reward management. You understand the reward and human resource management. HRM, human resource management, is extremely important. Management of human for the success of any organization is important. So here I would say that right people should be hired in the organization. As it was mentioned, if you saw here in Mckenzie's 7S model, which also mentioned about staff, soft factor, staff. You have to hire the right people. You have to hire the right people. You have to retain them. You have to implement a good reward management policy. And see, so many connections you will find of reward in APM. Mckenzie said right reward system should be there, right staff of right skills should be there. Okay. Now coming towards value-based management, which is VBM. I have this luxury to link today everything. VBM says that you have to implement a value, you have to implement a reward system that focuses on shareholder value creation. Then another connection I can show you here is building block model. Building block model says that when you set up rewards, you have to ensure 3 things. What are those 3 things? Number 1, motivation. Number 2, clarity. Number 3, controllability. So this means in entire APM, again, human resource management has a very important significance, and the management of rewards is extremely important. If you want to achieve your targets, if you want to ensure your performance management system is being fulfilled, if you want good measurement, if you want KPIs to be fulfilled, this means you have to ensure right reward management of the employees. So for that, you need to ensure a good system is placed. People are rewarded for the right work that they do. Whenever there is a supervisor who is assessing their performance, there should be no biasness in that. Supervisor should not take out his own personal grudge on the employee, but there should be a fair appraisal of the employee. For that, we have appraisal systems in place. So appraisal means that you have to check the performance of the employee, you have to judge the performance of the employee. But appraisal has certain big disadvantages. That is, appraisal should not be considered as a judgment, which means one should not think that through appraisal we are judging and we are not listening to anyone. Appraisal should not be a simple normal chat. Appraisal should not be considered as an informal activity where appraisal is being conducted and two persons are sitting, supervisor and employee, and having an informal chat. So appraisal is very useful provided it is done in the right way. So there are three types of appraisal styles that you can adopt. First is profit. First is budget constraint style. Now, what is budget constraint style? Which means you are appraising the performance of the manager on the basis of whether he or she has achieved the budget or not. Whether he or she has achieved the budget or not. Short-term targets will be seen here. Then comes profit cautious style, where you will appraise the performance of the manager on the consideration that whether long-term financial results are good or not. So budget constraint style focuses on short-term financial result, whereas profit cautious style focuses on long-term financial performance. So yes, budget constraint style, short-term financial performance. Profit cautious style, long-term financial performance. And then comes non-accounting style. Come on, tell me, non-accounting style, right in the comment section, which focuses on non-financial performance, which focuses more on qualitative aspect of the performance. So that is non-accounting style, which looks at the non-financial performance. Okay. So budget constraint, short-term financial. Profit conscious, long-term financial. And third is non-accounting, which focuses on non-financial performance. Okay. So reward management has very important significance in the entire APM. Okay. Now, after that, let's discuss about certain complex structures which are really important. Performance management and measurement system needs to be established according to different structures of the organization. If the structure is a functional structure, which means centralization is there, which means that the organization is established according to separate functions of finance, research, marketing. Okay. Then we have another structure known as divisional structure, which means that organization is structured according to different products or geographical wise, which means the organization is structured according to different products, and under these products comes different finance departments of each product, separate HR department of each product. And then comes the last one, which is known as network structure. Network structure is a virtual structure, which says that there is no need for physical presence. There is very little physical presence, where people are working remotely. Which means they are working remotely by using IT developments. They are working remotely by using extranets. They are working remotely by using intranets. What is an intranet? A system of an organization which employees can access, internal people can access. This is not an internet, it's an extranet. This is intranet. What is extranet? Extranet means that the internal people can access the system, but external suppliers, customers are also allowed to access the system of the organization. So in network structure, there is more use of intranets, more use of extranets, and there is very little physical presence like Amazon, which means you need to have a strong IT system in place, a very strong ERP system in place, very strong integrated system in place, which means that if you don't have any physical presence, but when customer orders you, the order should go to your vendor and then vendor should supply through the distributor. Everybody is a third party company and this is a network structure. So organization that is working like a network structure, like a virtual structure, like Amazon, their performance management and measurement system should be according to that, so that we are able to assess the performance of the staff who are working remotely, of the people who are working remotely. We are able to assess the performance of the vendors. We are able to assess the performance of a distribution company, and we need to set up our performance management and measurement system according to that. Wow. Guys, did you understand all this? Is this clear to all of you? And like this, APM in one slide. APM by Rizwan Maniya in one slide with more connections and entire topics you have seen were covered here. So I hope, guys, this remains to be a fantastic session for you. If you are not part of my groups, this is my WhatsApp number. Just send me a WhatsApp message. I'll share you the group link so that you can get the support till the end. Remember, my struggle for APM continues. And I'll give my best to ensure you pass, guys. So now, certain important tips I need to give you people. So listen very carefully, everybody. Very carefully. When you go to the examination hall, you need to keep this in your mind, that you are all consultants. You all are consultants. Write in the comment box, you are consultants. You have to think like a consultant. You have to speak like a consultant. You have to see like a consultant. And you have to hear like a consultant. You are a consultant. Examinable verbs will come like evaluate, means judgment. Assess, again positives and negatives. Recommendation, you have to recommend. Advise, again you have to give the advice. But remember, everything should be according to the scenario. They are asking you to justify, so justify according to scenario. Everything should be according to scenario. Now, normally people ask me this question, should we start with section A question, section B? Guys, it's up to you. It's up to you. But the best thing I would recommend is the first 15 minutes that you have in the paper, what you do, you skim through the requirements. What you do, you skim through the requirements. Are you getting my point? You skim through the requirements. Every requirement, find verb and object. Find verb and object. Find verb and object. Getting the point? First 15 minutes you have to spend on just skimming the requirements of verb and object. Find out verbs and objects. Once in those 15 minutes, you have seen all the requirements, then you will know that what topics are tested. So now if section A question relates to those topics that you are very good at, start with section A. If section B question includes those objects and verb, especially objects that relates to topics that you are very good at, start with section B. So there is no one right policy. But what I advise normally, you start with the easy question of section B first. Just capture 25 marks first. And then you move towards section A question of 50 marks and then come back to section B 25 mark question. First, start with your strength. Whatever your strength is, start with your strength. If you start with your strength, you will take less time to cover it. For example, if it's a 20-mark question and according to examination, 1.8 minutes per mark, you have to complete this in 36 minutes. If you start with your strength and you complete the question in 36 minutes, listen, you complete the question in 36 minutes or below that, because that topic is your strength. If that topic is your strength and you save time, this means the first psychological advantage you have got. First psychological advantage you have got, and now you will be more confident and will move towards other areas. Remember, it's a 100-mark paper. There are easy marks available. My friends, capture easy marks. Capture easy marks. You have the luxury. If you scored bad in one question, it's not the end. There are other questions. If you do good, you can pass. If you have done section A question badly, it's not the end. You have section B question. If you do good, you will pass. It's psychological pressure. It's psychological game. You need to be mentally strong. Mentally strong. And if you're so much afraid, tell yourself. Just stand in the mirror. Just stand in the mirror. Stand in front of the mirror and ask to yourself, is this the end of the world? What will happen if I fail? Nothing. It's just an examination. Take it lightly. Take it lightly. 3 hours are important. Don't be stressed. Just tell to yourself, it's just an examination. We are not in front of God and we are answering. It's just an examination. Okay? So my friends, you need to think like a consultant. See like a consultant. Hear like a consultant. You all are consultants of Rizwan Maniya. If your parents are alive today, ask them to pray for you. Because prayers of parents will help you a lot. My friends, during the paper, you might feel sometime that you can't do this. Things are difficult. The entire paper is not difficult. Remember my statement. If in between you are thinking, oh, this is very difficult. This is very difficult. No. Just recall Rizwan Maniya's statement. Everything is not difficult. You will have easy areas to score more. Don't give up until you get the result. Complete 100 marks. Complete 100. Don't leave the paper. If you complete 100 marks, you get the best opportunity to pass. Okay? So these are quick tips that I want to give you people. My friends, I hope the entire support from Rizwan Maniya will satisfy you. A quick feedback. How was this grand revision structured? Did you like the session? Did you like the links? I need your support. I need your support in terms of recommendation to your friends globally. I want you to spread whatever experience you have of VIFHE. Just give your feedback. How was the session? Guys, do share your feedback on our Facebook page. I'll share the link on different WhatsApp groups. And remember, you are not alone in this struggle. Rizwan Maniya struggle for APM continues. In this December 2020, VIFHE have organized so many free sessions of AAA, SBL, SBR, AFM, of PM, FM. If you have younger brothers and sisters, please do refer them about VIFHE online. We have all the papers, teacher, and everybody is working so hard, like you can see Rizwan Maniya in front of you. So we need your serious recommendations, your serious support, so that we can help global students in entire ACCA papers of skill and professionals. Guys, will you support us? Say yes or no. Everybody. Will you support us? Say yes or no. We just need one recommendation from you, just one. I hope you can give one recommendation, right? So guys, thank you very much for being in the session in large numbers. We had a packed house today. I tried my best to perform best. Non-stop, you are seeing my energy. My voice is going down now. I hope you all pass. Please be positive. Please be positive. Consultants, remember Rizwan Maniya in your prayers, VIFHE in your prayers. God bless you. I hope you all pass with flying numbers, and do remain part of my WhatsApp groups and do give me the feedback. Thank you very much. Rizwan Maniya signing off from VIFHE. APM in one slide. Do give your feedback, guys. Thank you very much. Take care. Blessed. Bye.